Good morning. I think we've had a great session with the governor. He played two parts. I think first he played the wall with Rahul, like Rahul Dravid does, and gave all the risks that could happen in the environment. And then I think the second part was how he just hit the ball for sixer. So Shamal, I think he was the Virat Kohli for your bowling. We all know that India's growth story, and we've heard enough of it. I don't want to comment on that because I agree with what's said, that how resilient the economy is and how the future looks bright. I thought I'll just talk a couple of points on this and then really see what I feel is necessary, that not only do we achieve the growth that we have are expecting 7-8%, but how can we ensure that and probably accelerate that further. One of the things that I'm hoping that in the next few early on is that we could get a rating upgrade as a country. So today, India is BBB minus if our fiscal deficit is controlled, and it seems that the government is, through all these years, doing that. I think there's a good chance that we could get into a BBB category, which is the same rating as China has, which will mean that we will attract more funds into the country and our cost of borrowing will also go down. The second thing, like I look at as an opportunity, is where India is today placed in the whole. There's a lot of geopolitical crisis, as you know, and every day there's a new risk. The governor has given many risks, and we've seen that. Who expected COVID? Who expected the conflict in Ukraine and Russia? Who expected the conflict in the Middle East? So it keeps happening. But I think also when you see globally, a lot of people, particularly in the West, there is a lot of change happening on the political side. There are new governments formed. There are more coalitions being formed. There, India actually presents a strong political leadership which can take the country forward. And that again makes us in a pivotal position going forward into the future. And added to this, of course, is the demographic dividend we have and the strong technological stack that we have built. I mean, UPI is a pride for all Indians, and when you travel anywhere in the world, you see how much advanced we are digitally. But I thought I will now focus on some areas, in my view, which could help us to achieve our dream of becoming the third largest economy by 2028, 2029, and also probably some concerns that I have. I want to say first is on the cost of funds. The second part I want to talk about is the credit penetration and the availability of funds. And third point I want to bring forward is on the alternate credit support for NBFCs and the bond market. And finally, how do we talk about inclusion? So with that, coming to, first of all, the cost of funds. Over the last 3 decades, if you see, Indian interest rates have declined. I remember in the 90s, the interest rates were almost 17%, and I remember paying 19% to good companies were paying that. Now those rates have come down to 9%. But yet, I think, frankly, this has been because of a lot of policy reforms that has happened. But yet, in our view, the real interest rates today are still highest amongst the 5 largest economies. We are the 5th largest economy. Our real interest rate is still the highest. India has a 2.3% real interest rate. In the USA, it is 1.2%. China is also at 2%. Japan, of course, is 0.2, but leave out Japan. And so is Germany at only 0.1. So we are paying a higher cost for interest, which means in an environment where we want to actually become more and more competitive, we are finding that our interest rates are not matching that to the rest of the world. And therefore, our belief is that private capex, which is a concern over several years now, one of the reasons is also that our interest rates are higher, and therefore there is not enough investment taking place in capex, and our growth story to that extent is still we can accelerate it further. Because if you have to be one of the largest economies in the world, our share of global trade has to go up. Today, our exports of goods are only 2% of global trade, and services is 5%. I think there is definitely a scope for us to go up further. The second point I want to bring is that whereas we have credit growth, I think we need more. Debt is the one which is the really raw material for growth. We've all seen how the cost of debt is much lower than the cost of equity, and we need more debt. The private sector credit to GDP ratio for India is just 55%. The ratio of private credit to GDP in India is 55%. This is much lower than the world average. World average is 148%. China is at 182%, Korea 165%, and even Brazil is higher at 72%. So I think we need more debt to be given. The governor spoke about the banking sector. But India's banking sector is amongst the smallest, if you look. We are the 5th largest economy. Our banking sector in size is the 15th largest. Our banking sector has $2.6 trillion of assets, while that of the USA, of course, is 30 trillion. China is 47 trillion. So if we have to move into that, I think we need larger banks. The FM also spoke about it yesterday, that we need not one state bank, but many such banks and many larger state banks. And to be an advanced nation, our credit has to grow at 18%. Till now, we have not been able to do that. Our growth rates have been about 15, 16% at best. And if we have to do 18%, I believe that we will have to expand the credit growth. Your session today talks about inclusion as one of the important things. I think it's really important that we include MSMEs as well as the other areas which have been left behind for inclusion. And I want to just talk a little bit about it. The MSME sector, they are major drivers for growth and employment. It's said that for every MSME, at least 2 people are employed. And we can generate 11 crore more jobs. We've seen that in the last few years, there has been a lot of tension as whether people are getting enough employment and are they fully employed. And therefore, MSME is one sector which should help in this growth rate. This sector also contributes to 40% of our exports and 28% of our GDP. If this sector has to grow, I think we have to recognize that though it contributes to 28% of GDP, only 3.5% of the bank loans are going into this sector. And therefore, more and more such these entities must have access to credit. And because of only availability of credit can they grow faster. And some ways people say that our economy is getting a K-shaped recovery. So the governor spoke about it. Yes, urban growth was good. Rural consumption was lacking behind. It's coming up. But this has to continue, because we cannot have a K-shaped recovery where some sectors do exceedingly well and others don't. And we believe that there is an option that different financing options need to be really looked upon so that these sectors, which till now have not got enough credit, can be given. And now I come to the role of NBFCs. I think NBFCs, as even the Honorable Governor said, play a big and significant role in it. And whereas they are banks, they are complementary to banks as well, because there are areas where the NBFCs can reach where banks may not find it profitable enough. There are also certain types of loans which NBFCs can do, which banks may not want to do. And if you look at it, the NBFC sector, as the governor also pointed out, has been able to withstand the stresses that have come about, the risks that we went through from 2018 onwards. The NBFC sector has come out strong. Whether it was, as you may remember, the ILFS crisis, whether it was the failure of the banks like Yes Bank, the DHFL crisis, and then, of course, COVID and all the other issues that have had. I think the NBFC sector has come out well. There is enough capital adequacy. It is about 27%. It's well capitalized. The NPAs are in good situation, and the NBFCs are much stronger. The RBI has taken many measures to ensure, as the governor said, to see that this sector remains healthy. So I think today the NBFC sector is well positioned to meet the credit needs of small and micro enterprises. With the India Stack, we have a strong opportunity through the digital identity and digital payment technologies. This will help technology-driven NBFCs to efficiently assess credit, underwrite risk, and improve the loan recovery. Additionally, there is enough data available from many other sources, whether it is the GSTN data, the income tax, credit bureaus, and the fraud registry. All these are now interlinked. All these also share data, and therefore we believe that the underwriting processes are much more robust today and will continue to get better and better. And therefore, this is a time when NBFCs also need to have access to more funds availability. Today, for NBFCs, the major source of funding is still banks. 55% of the funding from overall for NBFCs comes from banks. There is a concern which RBI has often now raised, as more so in the last few months, when they are saying that there is too much of contagion effect, that if there is an issue with NBFCs, it could affect banks and so on. And therefore, we need to widen the scope of availability of funds for NBFCs. And this is where I think now the RBI has also done what is the upper layer of NBFCs, where the regulatory oversight is much more than it was before. So earlier on, there would be an arbitrage between banking regulations and NBFC. This arbitrage is getting reduced more and more. And hence, this is the time, I think, for the RBI to start looking at giving the ability to raise deposits for NBFCs. Today, if you look at it, amongst the top NBFCs, there are only 5 NBFCs which have a deposit-taking license. And no new deposit-taking license has been given since 1997. I think with so much now of regulatory oversight, with so much more of technology, I think this is a time for the RBI to look at, consider giving deposit-taking licenses, at least to the large NBFCs, which are in the upper layer, which the RBI is also regulating in a much stricter way. It is possible that we can also give the insurance to deposit takers as it is done for banks, and a charge, the insurance premium could be put on to the NBFCs. In addition, we could also have a minimum fixed deposit that you can take, nothing below $1 lakh or something of that sort, so that more intelligent or more knowledgeable investors put in public deposits for NBFCs. But I think I would urge that the RBI and the regulators look at this. The second issue is on a weak bond market. This is one of the challenges which we as a country have faced over a long time. There have been many attempts to develop a bond market, but it has just not gone there, and more needs to be done. Our corporate bond market is much smaller than that of most other countries. It is only at 16% of GDP, which is even lower from other peers like South Korea, which is at 87%, Malaysia is at 57%, China is at 36%. So our corporate debt market is only 16%. And that also, the bond market is biased towards government. 70% of all the bond issues are with the government. The balance, out of the balance, 30%, 21% of these are only on the AAA and AA companies. So what is happening is that the companies which are lower, the BBB and so on, are not being able to attract the bond market, and their costs of funding is low. In fact, I find that in our own experience, there are many companies which are on the verge of becoming good, large players, not only in India but abroad with exports, but their cost of getting credit is much higher. I think these are the companies that have to, which need to be supported at this time with lower credit costs so that we can move forward, and the growth that we are envisaging of the 7 to 8% is realized, and it is spread across the country. The good news, of course, is that the inclusion of our bonds in the JP Morgan bond index would mean that almost 2 lakh crores of extra credit would be available in the system. I'm also now going to talk about, since we talk about inclusion, I just want to talk about an important fact in our country. If you look at the country, there are some parts of the country, if you look by and large on a basis, the eastern part of our country is much different in terms of development compared to the west, compared to the south. And if you were to look at just people in the aspirational districts which the Prime Minister has identified in 2017, these are the most backward districts. Here, out of about 200 million people, if that was a separate country, then in terms of human development indices, we would be amongst the worst in the world. We would be compared to Burkina Faso and such other countries. But the fact, if you take the rest of the country, in terms of sustainable development goals, we are almost at what the World Bank wants us to do in 2030, we'll reach there. But this part is which is lagging behind. And I think this is the part which we need to bring focus on. 16% of India's population lives in this, but only 1.5% of our CSR money goes in it. You will be shocked. Almost our tribal population is about 8% or 10%, something in that region. And there, the average, and this is a personal experience I had, our honorable president today is from a tribal community from Orissa. And she was telling us that in her village, she's age 64. She's the longest surviving person in that village at age 64. The average longevity, if tribal India, is 11 years less than what you and me have. So this cannot continue. If it continues, our growth rate, if we don't take the whole country into with us, we will have issues. So I'm very glad that Anant, you and your team thought of doing the inclusion, that it should be inclusive growth, and highlighted that. So if I was to say, in summary, India is really looking good as we look at the future with a lot of optimism. And I think that the crisis in the world actually is an opportunity for India to become a leader. We can do much more if we can bring the availability of more credit, if we can bring down the cost of credit, if we encourage more NBFCs and have a more inclusive growth rate, then we should do very well to become the third largest economy in the world in this decade itself. I thank you. I thank the Financial Express for calling me and for you all patiently listening to me. Thank you.